I'm Larry Steinhouse, and welcome to Money Chat Now. Money Chat Now is a politically charged stock market pre-show giving you the politics of the day and the biggest moves in the stock market. It is presented with comedic common sense and just the right amount of sarcasm by an expert in financial literacy, and hey, that's me, Larry Steinhouse. Today is Wednesday, July 6th, and I want to welcome you to the show. We are here live on WWDB Radio 860 AM in Philadelphia, and we are live on Facebook, Twitter, LinkedIn, and YouTube. Hey, you can also find me on Facebook, LinkedIn, Twitter, Truth Social, TikTok, and all those other social media sites by searching Larry Steinhouse. Hey, just a reminder, if you're watching online, hit that like button and hit that share button. So all you guys online right now, I see you, Mark and Tom and Tommy and Mick and Louie and Michael. All you guys, hit that share button right now. And don't forget to subscribe to the YouTube channel. I don't know, it might be back yet, who knows. Look up Money Chat Now on YouTube and see if you can find it and see if you can subscribe to it. And also like the Money Chat Now page on Facebook, and you can comment live during the show on all of those social media sites. And please say hi so I know you're watching. Hey, by the way, if you're commenting from a group and it's not the Money Chat Now fan page, your name will not show up on my dashboard. So please go to the Money Chat Now page and comment there so I can recognize you. Money Chat Now, of course, is brought to you by Investor Schooling, and you can attend a complimentary class tomorrow by going to investorschooling.com. And there you will learn about real estate investing and stock options trading from those who do it every day. All right. So today on the show, we're going to be talking, of course, about the recap. We're going to be talking about China tariffs, signs of slowing inflation, the Juul Vapes, red states recovering, and I'm going to talk about whether Social Security will still be here when we get older. I see my brother Seth has joined us. Thanks, Seth. I always appreciate you watching. Hey, it was a strange day indeed yesterday. It started off horrific when the Dow dropped almost 700 points early morning. Strangely enough, the S&P, which also dropped in the morning, finished up, and the Nasdaq finished up 200 points. The Dow finished down, but it wasn't so bad when you consider it was only down 130 points. Two indicators changed the market yesterday. The first was when the bond rate started to drop, and the other was when oil prices started to drop. I mentioned yesterday that the bond rate usually ties into the Nasdaq stocks. It usually ties in inversely. So when bonds go up, the Nasdaq goes down, and when bonds go down, the Nasdaq goes up. Bonds went down, so of course the Nasdaq shot up. The bigger surprise, however, was the price of oil. Oil fell supposedly on fears of a recession, and less people will want to travel and use gas. Frankly, I don't really think that was the reason. In fact, the travel stocks like the airlines and the cruise stocks all moved up after first moving down. So why would they move up? If there's a recession, well, wouldn't less people travel? I don't know, whatever. But here's a favorite or maybe not so favorite indicator of recession looming. Whenever the 2-year bond has a higher yield than the 10-year bond, it worries Wall Street. Well, this happened again yesterday. They used the term yield inversion. So if you ever heard the term yield inversion, that's what it means. Today, by the way, we have two big pieces of news that will be delivered. The first is the bond auction. We will see how the market will react to this auction and what the results will be. And the other is the nervously awaited remarks from the Fed Chair Powell. That will be at 2 o'clock. Ugh. Yes, it's that time again. If you remember, the Fed raised interest rates 75 basis points the last time. And now Wall Street is expecting the same. I'm personally expecting the Fed to say that they're noticing a slowdown in sales of goods. Well, anyway, if they're in touch with the average American, that is, maybe, because, it really is happening. The question is whether the Fed will notice it and slow down the increases. Remember, this is just the report. Watch for 2 o'clock today, and at that time the market will react violently to whatever he says. Maybe up, maybe down. And look, some other indicators to look for today will be the jobs report and the non-manufacturing PMI, or the purchase management index. So it's going to be an exciting day. And by the way, there was also something else this morning which said that mortgage applications were down. So that's not great either. All right. Also, on a side note, Ford reported that sales are slowing, and they did report an uptick in sales. However, it was below an analyst's expectations. The stock is now 11, and it's at its 52-week low point. I believe it's going to go back to about 8, which was the pre-pandemic level. Tesla also fell, and it's also below 700. I personally believe it's going to retreat to about 300s before the 3-for-1 split. That would make it about 100, and it'll probably even decline from there. Anyway, look, let's take a look at the futures. Let's see what's going on, and let's see what's happening here. Right now, the Dow is down 61, the S&P is down almost 6, and the Nasdaq is down almost 5. So, we'll see. We'll have to see what it brings. A couple other people have joined us. It looks like Glenn, and it looks like Charles and John. Oh, and Tommy says that Money Chat Now is now running on YouTube. Thanks, YouBoob, actually, right? All right. So China tariffs. All right. I was talking to my son Joshua a few months ago, and he said something to me that I didn't understand at the time. Actually, I thought it was insulting. He said that Trump was the most ineffective president he could remember. No, of course, you and I believe Trump was the best president in the past 50 years, and I still believe that. But remember, my Trump didn't say he was a bad president, although my son may believe that because he is a Democrat. I don't know, one day I got to teach him the truth. But he did say Trump was the most ineffective president. Now, we all know that all of what Trump did was for the betterment of the country. Like, for example, removing us from the unfair Paris Accord that charges countries to clean up the messes in the accord that are doing nothing to stop pollution. You know, countries like China who pollute the air without any consequences. We had to chip in and pay for the cleanup efforts, but they didn't have to stop polluting the air. That's if there was any, right? So I don't even know if they actually cleaned it up. All right. As you know, Trump removed us from the terrible deal and said, let the countries who pollute clean up their own mess. That makes sense to me. Well, it didn't take brain-dead Biden long to re-enter us into the Paris Accord, and now Biden is trying to reverse another great Trump idea. This is the Chinese tariffs. Trump logically installed tariffs on Chinese goods. These tariffs would encourage Americans to buy American-made products. It also encouraged American companies to build their products here in the United States and keep jobs here. Well, Biden, in an effort to lower prices, maybe to get some votes in November, is introducing the idea of dropping the tariffs on Chinese goods. This couldn't be more short-sighted. Yeah, maybe it'll lower the prices of some goods temporarily here in America because they'll lower tariffs, but now Americans will be buying Chinese goods instead of American goods. It will discourage manufacturing here in America, and it will all create more and more unemployment. Oh, but don't worry about it, Biden fans, because all the changes will take place. You won't even notice it, until after Biden is out of office and in his geriatric home, or maybe even dead by then. Either way, he and his thieving family will never notice the damage to the Americans anyway, because of the privileged world they live in. Of course, we have the other problem, and that's how Biden will be seen by the Chinese. This action will prove Biden is a weaker leader than everyone else thinks he is, and China will start to take more and more advantage of us. In the end, it won't make much of a difference to the average consumer anyway. The downfalls will be a tremendous disservice to this country. However, I've noticed that a common theme in the Biden administration, although my son said Trump was the most ineffective because his policies are being overturned, Biden appears to be much more ineffective because he can't even get a policy passed. So there, unbelievable, right? All right, a couple other people joining us. Peter, it looks like, is joining us on LinkedIn. Thank you. And Joe is joining us on Facebook too. And John also on Facebook. Thank you so much. All right, let's talk about slowing inflation. Hey, I was reading in the Wall Street Journal, and they had an article and some indicators that inflation was definitely slowing. Apparently, a price drop of raw materials such as corn, wheat, copper, and more are being noticed. Natural gas prices shot up more than 60% before falling back, to close the quarter at 3.9% lower. U.S. crude slipped from highs of above $120 a barrel to end around 106, and now they're about 100. Wheat, corn, and soybeans all wound up cheaper than if they were at the end of March. Cotton unraveled, I loved it, losing more than a third of its price since early May. Benchmark prices for building materials like copper and lumber dropped 22% and 31% respectively, while a basket of industrial metals that trade in London had lost its worst quarter since the 2008 financial crisis. Of course, many raw materials still remain historically high, but it's definitely a sign of inflation reducing. However, to me, it's also a sign of the economy cracking. And I'm not talking about a little crack. I'm talking about the pieces are starting to chip off the economy dam. In the same issue of the paper, the Wall Street Journal reported that many are using their savings and massively charging credit cards just to keep up. I've also noticed that many companies have started layoffs, and houses on the market are staying there a bit longer. I also noticed foreclosures are up. Look, this time next year, it's going to be the first real damage. You're going to notice, seriously, the first real damage of the changing economy. Watch for it and be prepared for it. I'm going to scoop up some houses and build up inventory of income, basically of income-producing houses. Look, if you want to know how to do it, watch this commercial.
Okay, so you thought about buying and selling real estate. You've thought about investing in the stock market, but don't know where to start. Well, what if you could find a place to unlock strategies to master both real estate and the stock market, all without the headache? That place is Investor Schooling, hosted by Larry Steinhouse, an expert in real estate, financial literacy, and the ins and outs of the stock market. You can attend Investor Schooling in person or online 8 times a month. You can and will learn how to make money in real estate, and you will learn mastery of stock techniques such as options and covered calls. You will even get a chance to ask one of your burning questions to the stock options sultan, the master of picks and plays. Call 866-424-2829 for free information and receive a complimentary pass to attend classes, or register online at investorschooling.com. Don't delay. These passes are limited. So what are you waiting for? Call 866-424-2829. That's 866-424-2829. Or visit investorschooling.com. That's investorschooling.com.
All right, welcome back to Money Chat Now. I'm your host, Larry Steinhouse. And of course, if you'd like more information on investor schooling, you can go to investorschooling.com or call 866-424-2829. That's 866-424-2829. Hey, I want to thank you all for listening on WWDB Radio 860 AM in Philadelphia. And if you're watching online, please hit that share button. Come on, guys. Come on, Joe. Hit that share button. John, Charles, Glenn, Tommy, hit that share button and let your friends know about this great show I put on every day. All right, hit the like button. Let me know you're enjoying the show. So all you guys hit that like button right now, too. And also leave comments on Facebook, Twitter, LinkedIn, and YouTube. And, of course, I'll try to respond to them live. All right, so far, of course, we've been discussing the recap and the update. Right now, the Dow is down almost 80 points. The S&P is down about 8.5, and the NASDAQ is down 17. It's going to be an interesting day today. We're just going to be waiting for report after report after report. We talked about signs of slowing inflation and also signs of slowing economy. Coming up, we also have Juul Vapes and the red states recovering and Social Security. And then, of course, we have today's picks and plays. But did you guys hit that like button yet? Did you guys hit that share button? Don't forget to leave comments on Facebook, LinkedIn, YouTube, and Twitter. Make sure you say hi. And, of course, if you're listening on WWDB Radio, be sure and set a preset to this station and listen every day at 7:30. Also, look up Money Chat Now on Facebook when you get home and let me know what you think of the show. Hey, by the way, before we start the second half, did you guys order my new book yet? Go to wherever fine books are sold. Look up Money Hacks by Larry Steinhouse. And by the way, you can have that actually, you can have the actual copy in about 2 weeks, and you can actually get it right now on Kindle or Nook right now. And the physical book, once again, you can have that in about 2 weeks. So order it now, and you can get it. All right, let's get into the second half. Let's talk about this company, Juul. So some of you guys know who this is. We've all seen them, and some of you have used them. You know, the vape units that have you kind of suck in the nicotine and other substances as a replacement for a lit cigarette. Well, some of them are bulky and others are slim as a pen. But, you know, the leader in the vape world is a company named Juul, and it's been at the forefront of several lawsuits, and the FDA is currently trying to ban the company from selling vape devices. Many years ago, these devices were being advertised as a smoking cessation tool. You know, the company basically claimed that you can use this while you break your habit of smoking a lit cigarette. Well, not much research was done at the time to determine whether they're actually safe or actually whether they even deter you from smoking cigarettes. Some even said that it's because the nicotine is so smoothly injected into the lungs that it also has its own peril of addiction. Well, recently the FDA actually filed for a ban on Juul devices because the FDA felt too many teens were using it and falling into addiction of nicotine. By the way, hello FDA, have you noticed another product that does that? Maybe a ban on cigarettes is in order as well. Anyway, they just removed, believe it or not, the ban on Juul device, which is really weird. The agency said on Twitter that the stay, so they actually took a temporary stay, suspends the marketing denial order, which conducts further review, but it does not rescind it. So basically, the FDA did not remove the order to ban Juul devices. Rather, it temporarily rescinded it. I'm kind of wondering if Juul hired someone from one of the big cigarette companies to teach them how to bribe the FDA. The FDA is using this theory to keep them on the market. So this is how the FDA says they should be allowed on the market. Companies must show that their e-cigarettes benefit public health. In practice, that means proving that adult smokers who use them are likely to quit or reduce their smoking, while teens are unlikely to get hooked on them. So we wait and see. I just want to say this real quick, right? So they basically say that they need to prove that adult smokers who use them are likely to quit, right? They also said that their e-cigarettes benefit public health. So what about all the other things that don't benefit public health, like alcohol? I don't know. I don't get this whole thing. All right, look, we'll see what happens. But, I don't really use them. I seriously don't care either way. But isn't it fun to watch the cloud of smoke come out of cars when drivers are using them? It's definitely, it's more entertaining than someone driving a car with a mask, watching this puff of smoke come out. All right, let's talk about some red states and what went on. Hey, in the battle of who the best governors are and which states recovered the best from the scamdemic, it was the Republican-leading red states that led the way. On the job front, since February 2020, the month before the pandemic began, the share of all U.S. jobs located in red states has grown by more than half a percentage point, according to the analysts of the Labor Department. And here's interesting. Red states have added 341,000 jobs over that time, while blue states shorted 1.3 million jobs as of May. So the red states proved to be more business friendly, and because of this, several major companies have actually even moved, and they've actually announced moves to their headquarters from blue to red states. The migration of people to the red states was pretty impressive as well. Many went to the red states to seek employment and pay less taxes. New York and California were some of the worst states to live in and will continue to be as companies and the higher paid taxes, they basically moved away from these states. It will be interesting to see if the people will migrate back to blue states because of the Roe versus Wade decision. Yeah, they may actually move there for less freedom, more taxes, just so they can live in a state that kills preborn babies. As I mentioned earlier, the tax rate in the red states is lower. Listen to some of these numbers. The states that gained the most migrants levied an average maximum income tax rate of 3.8%. So they had a maximum of 3.8%. Florida, Texas, Tennessee, and Nevada actually have no income tax rate. Wild. So the 10 states that lost the most residents have an average rate of 10% or more. I wonder if more taxes is a good idea. Duh. Well, I certainly would move if I didn't have so many ties to this area, because I would move to Florida in a heartbeat. However, maybe we'll have a good governor in Pennsylvania, and all I can say is go Mastriano, go Mastriano. All right, let's talk a little bit about Social Security, but real quick, I want to say hello to a couple people who've joined us online. We got Harold and Betsy, and it looks like Peter. Thanks so much. All right, every few years, we hear rumors of Social Security getting closer to or running out of money, right? Well, the newest rumor is that Social Security will run out of money and won't be able to pay full benefits after 2035. It figures, because that's right about the time when I'm going to be collecting, right? All right, congressional leaders are working to solve the problem. Hey, Congress, here's a hint. Stop stealing the money for other things. Anyway, they're working on a solution to make sure that all the beneficiaries get the money that they're due and paid for. I paid into this program. So to fix the program, lawmakers generally have a choice of raising taxes, cutting benefits, or a combination of both. Democrats' proposals firmly advocate for tax increases, while significantly increasing benefits. The plan calls for raising payroll taxes, which are used to fund Social Security, and in order to make the benefits more generous, right? Currently, workers and employees each pay 6.2% on wages up to the first $147,000 per year. And this year it's $147,000. Every year it goes up. I never understood this, by the way. I never understood why they tax for the end of the year if you made more than a maximum. The $147,000 is the most income you can be taxed with Social Security. So in other words, if you make $300,000 a year in income, after 6 months you are no longer taxed on that income. For Social Security, that is. So first year, half of the year, it shows up, and after that it stops. I remember years ago, I used to reach the maximum a few times, in a few years. It was a nice bonus in my paycheck, and when I did, I seriously just never understood it. Now I do know that it ties to the maximum benefit you can collect, and that's where the number comes from. So that does make some sense. Now, some Democrats actually want to start collecting the tax again after income reaches $400,000, and others after the income reaches $250,000. I got to be honest, at my age, being the selfish purchase I am, I think you should increase the Social Security tax amount to everyone right now. Hey, I want my free money and I want the millennials and the Gen Xers to pay for it. After all, my taxes went to their free unemployment checks last year. Payback's a bitch. By the way, I've said it many times before, I don't believe Social Security will be a problem. I actually believe that both parties will try to make themselves look good by solving the problem when it happens. Most likely there'll be a tax increase on the working class. And good, tax those guys. Hey, if you want to learn how to pay less taxes and make more money and be more secure in your older years, buy my book. Find out here soon. I'll see you guys in a minute. Hi, I'm Larry Steinhouse, and I've written a book called Money Hacks. The subtitle to this book is because everything you think you know about money is wrong, and I promise you there are things you think about money that are wrong. There are chapters in this book that I think you will find absolutely fascinating, and some of them are, what is money anyway? Can money buy happiness? I'll bet you don't know the answer to that question. The truth about credit scores, how you can actually use credit cards to rebuild your credit. I also have chapters on being your own bank, how to buy houses with an IRA, and how to invest with other people's money. There are so many other chapters. There are 22 total chapters in this book, and I promise you're going to learn how to make more money and pay less taxes when you buy this book. My name is Larry Steinhouse. The name of the book is Money Hacks. You can get this book wherever fine books are sold, and you can go to barnesandnoble.com right now and pre-order it. I hope that you will enjoy it. Welcome back to Money Chat Now. I'm your host, Larry Steinhouse. Hey, did you guys order the book yet? Come on, what are you waiting for? Order the book. Hey, Mick actually says that his book will be delivered on July 25th. So Amazon, I guess, told him his book will be delivered on July 25th, but he can't wait. All right, so far, of course, we've been discussing the recap. Let's go real quick. The Dow is down 115. The S&P is down 13, almost 14. And the NASDAQ is down 36. Hey, we talked about China tariffs, and I don't know, and how... I don't know. Biden doesn't do anything right. It doesn't make any sense. We talked about slowing inflation and also slowing economy. And we also talked about Juul Vapes and, I don't know, whatever. And, of course, the red states have recovered the most, and that makes total sense. And if I could just get rid of all this stuff that's down here in my office, I can move to Florida. All right. Coming up, we have today's picks and plays. But first, did you guys hit that like button? Did you guys hit that share button? Come on, guys. Hit that like button. Hit that share button. Come on, Betsy and Michael and Seth and Harold. Hit that share button right now. Hit that like button. Let everyone know what great plays are going to be coming by sharing this information. And you can share on your page or in groups. Of course, you can share in groups too that you feel will benefit from great stock plays. And you can leave comments on Facebook, LinkedIn, Twitter, or YouTube. And if you're listening on WWDB Radio, set one of your presets to this channel and listen every day at 7:30 for all you need to know about the politics behind the stock market. All right, let's get into it. Let's talk about what's going on today. It's certainly going to be an interesting day, I got to tell you that much. The Fed report will tell the whole story, or at least will be the cherry on top at 2 o'clock. The other reports, such as the preliminary job reports, will be announced at 10 this morning. And I've said it before, one of the cool things you can do, if you do this, I do this, because I'm just a nut, right? Especially when it comes to this stuff. I usually leave the report, in other words, like Powell's speech, they have it live. I leave Powell's speech, and on the other screen, I'll have the stock market, and I'll actually see the Dow moving up and down while he speaks. So when he speaks and answers questions, you can actually see the market move up and down. And it's funny because some of the questions are a little bit tough. Like, do you think you'll be raising interest rates 1%? And if he says yes, then you watch the market go down. If he says, oh, we'll never do that, then you watch the market goes up. It's really cool to watch. And by the way, don't forget it's earnings seasons next week, and that usually drives stocks up. So look for your and my favorite stocks to move up today and next week. Meta moved up about 8 points yesterday, and I expect it to continue. Apple should also do the same. I got to tell you, sometimes I look for news articles that appear to be fresh articles. However, when I read them, I realize it's an old article rehashed. When that happens, I look for the stock to be beaten down by the fund manager who injected the article or asked his friend to print the article, and I buy up the stock because I know it's going higher. So that's a really good play. So sometimes you'll see that Apple will say things like they're not selling enough iPhones, which is an old article. Or Meta will talk about privacy issues again, or whatever it is that's on their mind. All right, let's take a final look at the futures and see what's going on. Right now, the Dow is down 93, the S&P is down 11, and the NASDAQ, of course, is down 25. So it's not that bad. All right, let's talk about crypto real quick. So crypto actually, it looked like Bitcoin moved above 20,000 for a little while, and I don't know if it's still there, but I'm telling you right now, crypto is not the place to be. You're gonna get hurt. It's gonna be, between 12 and 13 is where it's going. Ethereum is also hovering in the 1,000 to 1,100 range, and of course, all the rest of the junk coins are falling. It's a bad place to be. I got to tell you, it was never a good place to be, but now it's a bad place to be. Now, gold and silver are a bad place to be too. What's going on with this? Gold is like in the 1780s, and silver is like 19. I don't know. This is really annoying, especially because I keep loading up on silver and gold, so I don't understand what's going on with that. That's really, really starting to piss me off too. Look, Treasury bonds are down. They're down below 2.8. And oil is also moved down. I did not check. Actually, I think the average price of gas now is 4.78. I believe. I got to double check. But I wonder if gas stations are lowering their price at the great dictator's request. All right. Listen, for those of you who don't know who I am Larry Steinhouse. I want to thank all the listeners on WWDB 860 AM in Philadelphia. I want to thank you for your continued support. I am the host of Money Chat Now. I am also the CEO of Investor Schooling. And of course, you can contact me directly if you'd like at contactlarry.com. That's contactlarry.com. And of course, from time to time, I own some of the assets and options discussed in this show, and the opinions discussed in this show is solely mine, and no one has asked me to discuss them. All right, everybody, make it a profitable day.